What's up? In this video, we're going to be looking at why USD JPY did what it did. So that's going to be coming right up. Stay tuned. All right, what's up, guys? Brandon here, Ikata Trading. All right, let's go. So we're looking at traps today. Now, I haven't been having a very good week, nor a very good year. I'm basically at about break even for the year, so I decided to do a very short back test. Just kind of obviously for my own reasons, to kind of make sure that I stay sharp, but also this, I'm recording this video to kind of help you understand what it is I might see as well. Now, before we get into what is going on, I think it's very important to realize that there are multiple different ways to see these traps and to understand them. There's no one way to trade this, right? But once you understand direction, I believe entries come very, very easy, right? So obviously we're looking at USD JPY, and I want to just showcase something. So I'm going to remove this. I'm going to remove this and this and this. Oh, and this too. So straight off the bat, you could see here on USD JPY on the 15-minute time frame that retail traders, right? And I'm using the term retail traders because this is what the vast majority do, right? Excuse me. But in this area, and also in this area, in all of these areas that I have kind of circled, retail traders, or the vast majority of traders on the whole, most likely would be prioritizing one thing and one thing alone. And I would like for you to stop, pause it, and you tell me, what would you do in these areas? What would you do in these areas based on your understanding of trading, of trading Forex? What would you do? If your answer was sell, you'd sell any of these areas, then you are one of the retail traders who would have likely been trapped, right? And if you weren't trapped, it's probably because you were looking at something else, or you probably didn't get the opportunity to be trapped, right? No disrespect, but it's how it works. This is how I see it. Now, retail traders learn this. I mean, I've spoken about this before, but retail traders learn to trade trend lines very early in their journey as traders. Trend line, support, resistance, right? And I have nothing against traders who do either of these things, any of these things, trade support, trade resistance, or trade trend lines. But my issue is when they do it blindly, all right? They like to do this thing where they would draw up trend lines and say this is market structure, all right? By my definition, or from what I understand, the word structure to be defined as is structure is a combination of elements coming together to create one thing. In this case, the one thing is the trend. That's the only thing. There's no other element. The trend is the only element. So when you think of a structure, you think of a building, all right, in the middle of the town. Think of all of the different elements that come together to create that one thing. Think of, steel and concrete, wood, glass, rebar, bricks, etc., right? If you build a house or you build a building with only one of those elements, it would be significantly weaker or even incomplete. You build a house with just wood, eventually it will rot. You build a house with glass, it can break easily. So you use all of these things to come together to create a stronger structure. So I have a problem when retail traders draw a trend and say this is structure. You're only using one element. The trend is only one element. So take a look at this. In these areas where retail traders would have sold, these 5 areas, and we know that there's 3 taps to confirm the trend line. In this case, there were 5. 1, 2, 3, 4, 5. All right. What these areas symbolify, again, areas where retail traders would definitely be prioritizing sells, right? Because again, trend line, and they'll be looking for sells based on this trend line, right? In these areas. Now, don't worry too much about what I drawing just yet. I'll explain in a little while, all right? And what do these traders do with their stop losses in these areas? Now, again, pause this, pause it, and ask yourself, How do you use a stop loss? Or how have you learned to use a stop loss? Did you use a stop loss by virtue of you put your stop loss right above where you enter? If you enter, let's just say you entered right here, do you put your stop loss right above there? Or do you put a stop loss really wide in, say 100 pips because you're looking for a really big swing? So you need to have a wide stop loss to cater for that. All right. If your answer was any of those two, then again, you will be a part of this trap. All right. And if your answer is not a part of them, then congratulations. All right. But retail traders, again, learn that right where they enter, if they enter for sales, they put their stop losses right above the entries, above the last high, as they like to say. So if they entered for sales here, they put the stop loss right there. If they entered for sales here, they put the stop loss right here. If they entered for sales here, and it's so on, so forth. They keep doing this. And this is what they do, right? This is what they do. And every single one of these areas has liquidity because the dealer, the person in control of the market, cannot take your money until he has hit your stop loss. So if you sold here and you sold here and you sold here and you sold and you sold all of these areas, these red lines are where stop losses are in majority. Now watch how the trap really snapshot. The dealer comes down to the low. He creates a low. Let me zoom in. Excuse me. He creates a low. He comes back up. He stop hunts the low. He goes just a little bit lower, just a little bit lower than the previous low, and creates the W pattern. Now, people oftentimes say the W pattern. They just draw W patterns randomly, and that W pattern most times wouldn't be valid because you could see a W pattern anywhere within this, this move here. The W pattern after the trend, after the retail traders have been trapped, is what is important. And keep that in mind, right? Notice, after the W pattern has been formed, he traps them one more time, this area right here. And he makes them feel like it's going to sell one more time. Nothing significant, maybe giving them about, give or take about 20, 30 pips. And then going exactly against them. Retail traders who are selling here, he takes them out. They're gone, right? All of them are gone here. Retail traders who are selling here, they're gone. He takes them out. Retail traders who are selling here, they're gone. He takes them out. The ones who are selling here, he takes them out. And the ones who are selling at this high, he also takes them out. And then he drags everybody who did not have a stop loss at this high or who used the very wide stop loss. He drags price against them almost, actually more than 100 pips. More than 100 pips. He drives price about, no, sorry, not more than 100 pips. Sorry, my bad. About, let's just say about 90 pips. That's the equivalent of a margin call, my friends. So if you did sell UJ, USD, in any of these areas, you would understand why you would have been taken out. I hope this helps, right? I can do a longer version of this, and put it on YouTube where I would showcase where I would have entered to buy, all right? But long story short, the understanding, this is basically, you have to remember that traps are everything. If you understand where the traps are and you understand how to navigate the minefield that is the traps of this industry, you'd know where to put your feet, that you don't blow up the instant you step on a bomb, because that's what the traps are. That's what they are. That's what they do. That's what they're designed to do, right? So I think that just backtesting this would give you significant advantages over many, many traders who trade in this industry. What are you going to do? I hope you enjoyed this. Yeah. So that was for Instagram. All right. I'll also be posting this on YouTube. So if you're seeing this on YouTube, you're seeing the longer version. So on right here in these areas, right? Remember, retail traders will be trapped in these areas, right? For sales here, 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 and here. They'll be trapped. What could I do to take advantage of this information? How can I use this information to make money? It's actually quite simple. I have created a setup called the ECR, the Exponential Moving Average Crossover and Retest System. Now, you're probably saying to yourself, well, a EMA crossover system, that that can be profitable, or that can be anything interesting. Well, let me show you something. Let me tell you how it works before I show it to you. I have a saying that the best possible ECR, or the best possible use of my system, happens after an M or a W pattern, obviously after the M and the W is valid. In other words, if there was a bear trend and retail traders did become trapped in sells, and there is a W pattern to reverse against these retail traders in sells, if there is an ECR right there, then it's actually quite valid. So let's take a look. You have your W pattern and then you have your moving average crossover. So let's take a look at that. All right, and by the way, the moving averages in question are the 48 and the 96. So just to give you an idea, because I know people will ask. All right, you have your EMA's crossover right here, right? And excuse me. Usually I would tell you to try to do this in the Asian session, but it can work anywhere. All right. If you notice, price would have crossed, the moving averages would have crossed, price would have shot up, come back down, not necessarily accumulate, but notice what happened right after this. Right after this area, price would have literally moved about, give or take, about 20 pips almost instantaneously. And depending on how you entered, all right, let me show you this. Depending on how you entered, if you entered for buys and had a 10 pip stop loss, because that's what I use. If you had a 10 pip stop loss, watch it. 10 pips is right here. Something like that. You would not be taken out. Your price might come back against you and go into a little bit of drawdown, but you would not be taken out. And watch this. Remember, we have a 10 pip stop loss, right? Look at this. Isn't this interesting? All because we are literally going against the vast majority of retail traders and what they do, what they see, what they think. This trade would be the equivalent of a 1 to 15 risk to reward ratio, because I had a 10 pip stop loss to enter and the trade went over 150 pips in my favor. That's the equivalent of 1 to 15. All by simply understanding who is trapped, why they're trapped, and how to enter using that information. It's very simple. It's actually quite easy if you backtest this. And by the way, what I do like this is not a secret. It really isn't. It's not a secret. Anyone who tells you that there are secret techniques to be successful in this industry is trying to steal your money. In theory, everything that everyone does to be successful in this industry is common knowledge. It's common knowledge. It's out there on the internet somewhere. You just have to know where to look. So when somebody tells you that what they're doing is a secret and no one else knows about it, trust me, they're lying to you. They are lying to you. The reality is it's out there. The difference is, and I'll tell you this now, the difference is that this is not all that is necessary to be successful, because a simple thing like holding price in a little bit of drawdown could be the difference between you getting out of the trade and you staying in for 150 pips, because that's in your mind. That's psychology or psychological, right? It's psychology or psychological. And that is where the real work in this industry comes in. Mastering your mind and being able to hold price, follow your analysis and hold price through the drawdown, hold your trade through the drawdown. And in this case, the drawdown would have been, what's that? Let's see. The drawdown would have been about 7 pips, give or take, before actually giving you something substantial, worthwhile. So in 1, 2, 3, 4, 5, 6, 7, 8 days, essentially a week and a day, you would have yielded about 15% gain, because you risk 1% here and you get 15% back. If this is assuming if you risk 1%. If you risk 1%. So I really hope that this actually made some sense to you. Again, this longer version is for YouTube. It's unedited and it's for YouTube. All right. I'm just doing this to show you again. Even successful traders backtest and try to make sense out of nonsense. Um, and it's not a secret. What I do is not a secret, right? How I trade is not a secret. How I look at the market is not a secret, right? It's out there. It's in broad daylight. It's in the open. But understand that this is not the only thing that is necessary to understand to be successful in this industry. This is, in fact, I would go so far as to say that this is literally about 5% of what is necessary to be successful. The other 95% are psychology management, risk management, emotional control, all of these other different things. And these things are the things that really cause us harm if you don't have them under control. Because you could take trades and sometimes you might get lucky. But if your psychology or your risk management sucks, that's where you're going to feel the pain. That's where you're going to feel the burn. That's where it's going to hurt. So I really hope that, you enjoyed this. I hope that you learned something. If you didn't know this already, if you did, then congratulations. You should be among some of the traders that make quite a bit of money. If you did not know this, then try it. Backtest it for yourself. Don't take my word for it. I'm just a guy on the internet. Don't take my word for it. Go test it yourself. Take a look at it and try to understand it yourself. Right? And see if what I'm saying makes sense. Draw it. Draw the trend line, right? Where retail traders might be trapped in a bear trend's case sells and in a bull trend's case buys. Draw it and see what happens afterwards. Don't try to trade it, just draw it. See what happens. See if these retail traders would be taken out of their sell position. Right? Some of these trends could last a day. Some of them could last weeks, months even. AUD USD is beautiful in terms of having trends that go on for months. Right? But what you're gonna do? So, in light of that, I hope that you enjoyed this little short video. I say in short, it was like 17 minutes, but this little short video. And if you have any questions, you can message me on Telegram or on Instagram at Ekata Trading, EKATA Trading. No spaces. Just message me there. I'll be glad to help in any way that I can. And otherwise, have a great day. Do some back testing. Do some studying. Peace out, guys.